Hello everyone, my name is James Perry. I'm a lecturer for ACCA Belfast, and in this short video lecture we'll be looking at the conclusion and the completion stages of the audit process. So the completion stage of the audit is of key importance, and it's during this stage where the auditor reviews the evidence obtained in the audit file along with the final financial statements to actually form the auditor's opinion. And there are a number of ICEs that are key in respect to this. We'll be looking at these in this short video lecture. So the first one then is in terms of quality control under ISA 220. So all audit work should be subject to review, whether it be the work of the audit junior, which should be reviewed by the audit senior. The audit senior's work is reviewed by the audit manager, and the audit partner reviews all the audit work completed. From an examiner's point of view and from your question paper point of view in terms of P7, this is quite a common area to look at in terms of audit completion. And therefore, the exam requirements may ask to consider the matters to consider and the evidence that you expect to find when concluding an audit file review. So it's key to bear this in mind. Okay, so in performing a file review, the reviewer should consider the sufficiency of evidence obtained and the documentation that's obtained, especially under ISA 230 audit documentation, because the audit file and audit documentation is the backup and is a substantiation of the auditor's opinion in the set of financial statements. So therefore, it is key. Another ISA which is important is ISA 450 in terms of evaluation of misstatements. And the objective of the auditor here is to look at both adjusted misstatements and unadjusted misstatements and see the impact on the audit report. So under ISA 450, it requires that all misstatements should be accumulated during the audit, and therefore these misstatements need to be discussed with management. Those adjustments that have been noted by the auditor should be collated and be presented to the client for discussion on what's called the audit error schedule, or sometimes called the audit adjustment summary. And in this schedule, this quantifies the amount of each misstatement and it proposes the necessary adjustments. So therefore, the adjustments may be in the form of a journal entry, or may be an amendment to a presentational issue in the accounts or disclosure note. So when misstatements are agreed to remain uncorrected by management, the auditor must then assess the level of uncorrected misstatements, both in terms of individual items and in aggregate, and reassess those in terms of materiality to understand whether this will make a material impact on the financial statements. And ISA 450 also requires that the auditor requests management to give a written representation, often known as a letter of representation, to confirm that these unadjusted misstatements are not material to the financial statements overall and hence will not impact the overall opinion made by the auditor. Another important ISA is ISA 520, and that's analytical procedures. Analytical procedures are not limited to just the planning stage of the audit. They're very important in terms of the completion stage, where the auditor can analyse trends, they can look at and recalculate ratios, look at variance analysis, and discuss issues with management in order to understand and in order to confirm that the financial statements in the final form are reasonable. But remember, these analytical procedures must take place in respect of the final financial statements of which the audit adjustments have been agreed and have been processed. Again, just to say that analytical procedures should be able to assess the auditor or assist the auditor to conclude as to the overall reasonableness of the financial statements. Now, a key aspect in terms of analytical procedures is that The auditor at this point should have received the final accounts from the client. An important thing to note as well is that the disclosure notes in the back of the financial statements, as well as the information in the front of the accounts, whether it be annual report or director's report, should also be reviewed by the auditor to ensure that they're consistent with the accounts and with the financial statements. For example, in the UK and Ireland, the auditor's report must state whether the director's report is consistent with the financial statements. So therefore, final analytical review is key. Okay, so two other issues to look at in terms of the completion of the audit is that of subsequent events and going concern procedures. So subsequent events is governed by ISA 560, and subsequent events used to be known more commonly as a post-balance sheet event review. And why this is important is that post-balance sheet event review or subsequent event review looks at the period between the balance sheet date and the date when the audit report is signed, and this period of time is assessed to conclude that there has been no significant circumstances or no significant issues that will cause rise to any modification of the audit opinion. So, examples of that could be reviewing internal accounting records, minutes of management meetings, and then also discussing subsequent events with management. Also, post-year-end management accounts could also be assessed to ensure that there are no subsequent events that will impact the audit opinion. Okay, so another key ISA, which is very topical at the moment, is that of ISA 570 going concern. And the reason why that is topical at the moment is because of we're in the current economic climate where businesses are actually going out of business. Therefore, the auditor has got an obligation to sign off an audit report whenever to confirm that the business is effectively going to continue for the foreseeable future. That is the next 12 months after the date of the auditor's report. Therefore, the auditor must conclude about the events or conditions that cast any doubt on the going concern concept. Therefore, the auditor will need to conclude on going concern matters at the end of the audit process. The way this is dealt with in practice is that the auditor may ask for cash flow projections, may ask to discuss issues with maybe external funders, and will also discuss plans and ongoing business projections with management to ensure that the business will continue under the going concern concept, and they will continue for the foreseeable future, i.e. the next 12 months. Okay, so another aspect to look at in terms of completion, and we've mentioned it previously, is that of written representations. So therefore, towards the end of an audit, the auditor must ensure that and must consider matters to be included in the management representation letter, and that's in accordance with ISA 580. So what happens with the audit representation letter is that this is further audit evidence that the client or management has given access to all the information that the auditor requires, and also the fact that the management will confirm that there are no material audit misstatements within the financial statements. So also what's key to ISA 560 as well, and very key to the audit process, is that in terms of ISA 260, which is communication with those charged with governance. So communication is a two-way process in the audit process where management will communicate with the auditor and the auditor will communicate any significant matters with the client. And this is probably a prerequisite for a very effective and efficient audit, that two-way communication process. And in terms of completion of the audit, this communication is normally done through an audit clearance meeting, also known as an audit closeout meeting. So, at the conclusion of the audit, the meeting will usually be held between the auditor, which will typically be the audit partner and the audit manager, and those charged with governance of the client, as well as management. And what typically will be discussed at this meeting will be the adequacy of the client's internal controls, any proposed adjustments in the audit adjustment summary, any difficulties encountered in terms of perhaps provision of information from the client, perhaps any ethical considerations that should be looked at. Also confirming then the manager's written representation letter, perhaps any changes in financial reporting, as well as the key audit issues which will be discussed, and potential adjustments will be confirmed, and unadjusted errors will also be agreed at this point. Something to maybe note is that the audit clearance meeting is not a requirement of the ICES, but it is a good audit practice, and it is professional audit practice as well. Okay, so there are a number of areas to be considered in terms of the completion stage of an audit, and it's a very common area actually looked on at P7. But also an important aspect of this is that there are so many ICES that impact the completion stage of an audit. So therefore, what a tip would be not only to look at the ICES in detail, but try in terms of an exam question to apply the knowledge of your ICES to the practical scenario that will be posed to you in the examination question, especially in this topic of completion of the audit. So thanks for listening. Hopefully this short video lecture will be of some benefit to you. So all the best in your exams.